Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Triple Q report for Wednesday, February 2nd, 2022. Before we look at the charts, just as usual, I want to encourage you to please click like each and every time you watch the daily Triple Q. It does help us out a great deal in being found on YouTube by searching Triple Q Analysis, Nasdaq-100, so forth and so on. And subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time the daily Triple Q report has been uploaded to the Wicked Stocks channel. And that includes any other content that Wicked Stocks uploads. And we put out a lot. And so it's to your advantage to see it early, certainly before the opening bell when it's relevant, and you can use it for your trading and analysis. Let's take a look at the daily chart. These are all daily charts, by the way, of the Triple Q. 2 weeks ago today, we settled below that channel bottom that today is at 374.57. It is a long-term price ceiling for this market, and below which we can still fall back to 325.82 in the weeks ahead. So this rally, we do have a short-term buy signal that was posted on Monday, and this is a rally to sell into the 370s. 374.57 is a target above 350.69. That is per Monday's settlement, above that descending one-third speed line. And over the next 3 to 5 days, and probably 2 to 3 days, we're 2 into it already, we should push into the 374.57 to 379.66 area, which is a descending two-third speed line. So this area is an objective. It is narrowing ever so gradually. It all comes together next week when it'll be in the mid to upper 370s. It can, because of the 374.57 long-term nature of that channel bottom, contain buying through February trade. And from there, the market can fail in a meaningful way, at least back to those lows from last week, and quite possibly, as I say, into the 320s over the next month or so of activity. Now, for today, we have decent support at the 361.63 short-term channel top that held roughly on Tuesday. We did slip below it, but we certainly pushed back and rallied to close at a new move high, a new pullback high, I should say. 361.63 can contain session weakness, and above which that 374.57 level is possibly in reach today. Let's take a look at the support and resistance for today. You can see the 361.63 channel top able to contain session weakness, and above which 74.57 to 79.66 remains a 3 to 5 day target. We're likely to get there in 2 to 3 days, possibly today if we push through 369.31. Now, 369.31 can contain initial buying pressures, and we could back off from there for a good part of the day. But if we push through 369.31, you should allow 374.57 on an intraday basis, which once again is the start of a narrowing range of resistance able to contain buying through February trade. And once tested, the market can fall off in a meaningful way through February. We don't even have to test it. I guess that's another point I could make. Because of the heavy nature that this market is below 374.57, this is considered a bit of a counter-trend rally over the midterm time frame. Long term, we're still bullish above the 325.82 formation. That is still a level that can contain annual selling pressures. But over the midterm time frame, which I say through February, this market remains heavy below 374.57. So we may not test it, but if we do, it does present a decent short setting opportunity that could be done in a number of ways, of course. It could be out of the money puts that don't expire for at least 2 or 3 months. So you've got decent delta on the way down. Now, if we do close above 379.66, today, and I don't see that happening, but we may do that by the end of next week, then yeah, this market shrugs off a long-term sell signal. And in the process, I've been using the adage for many years, a failed if it's a textbook long-term sell signal, as this one is below 374.57, a failed long-term sell signal is in itself a valid sign of strength over the mid to long-term time frame. So rejecting the sell signal by closing back above 379.66 should result in 408.71, that high from November, probably within 2 to 3 weeks. And I think the 420s are likely as we continue into March trade. There's a lot going on up there that I will show if we close above 379.66 over the next couple of weeks. Let's take a look at the downside. If we break or open today below 361.63, 356.88 in reach, while closing today below 361.63, we'll keep 350.69 in reach over the next few days. And that level can contain selling through the rest of the week. And if we close below it, that does pivot this market south in a pretty aggressive way as we continue into next week. Above 350.69, we're anticipating 374.57 before the week is out. But if we close back below 350.69, then that 325.82 level, as you can see on this chart, it doesn't take a stretch of the imagination to envision another week or two of downside activity below 350.69, and we're testing 325.82, which is long-term support, able to contain annual selling pressures, and above which the long-term dynamic as defined by this channel structure remains bullish, no doubt about it. It's just that we're in a near to midterm heaviness below 374.57 that does neutralize entirely if we can get up and over that 379.66 descending speed line I showed a moment ago. I think that pretty much covers it. Please click like each and every time you watch the Daily Triple Q Report, and don't forget to subscribe to the Wicked Stocks YouTube channel. You'll see a lot of good content come your way in the weeks and months ahead. That's all I've got for Wednesday's Daily Triple Q. I'll be back tomorrow for Thursday's Daily Triple Q. You have a great day.